Hey everybody, welcome back to White Boy Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, we're going to be talking about inflation and it peaking in 2022. Dun, dun, dun. I know that's kind of a controversial standpoint, but before I even get into the slides and all the data that Joe Consorti and myself put together, I just want to go on the record and say, I think that we're going to see prolonged periods of inflation with deflation, with disinflation, with potential stagflation, okay? So the reason I'm saying that is because I came out with the video last month talking about the great deflation, but if you read in between the lines in that video, a lot of that has to do with prices deflating from their all-time highs, okay, from Mount Everest, which we'll see data backed up in this video. So inflation has peaked for 2020, slowing inflation from here on out, but it will be prolonged. That's my opinion. Especially with supply chain issues, especially with a lot of things going on in the world right now. This was put together by Joe Consorti, great research analyst. Go check him out on Twitter. So first slide here is the CPI components. CPI, Consumer Price Index. We're going to blow this chart up on the next slide, but I want to get through these talking points very quickly. Just so you know, this is being recorded on September 14th, 2022. I will be going on vacation literally tomorrow, so this may not be out for another 7 to 14 days, depending on when I choose to release it. So all of the information at the time of this recording is accurate. So number one is energy is rolling over. Food, commodities, and services are topping out. Even though they are increasing a little bit, we'll see that in the next slide. Core inflation is topping out. It rose 0.3% this month. It is sticky, meaning it is the last to fall. We know this. We can watch live price charts of every component. So let's get into that. So I'm going to move my big head here. Give me 1 second. Okay, boom. The peak energy prices were set in June of 2022. That was a huge component of CPI going up as much as it did. Even though I don't believe CPI is measured fairly, especially when it comes to the housing component, the energy component, which is green, was a big reason of why it went up, okay? So if we take a look at March of 21, if you look at my laser pointer down here, all the way to June of 2022, you can see what's happening. So the thing is, though, services keep going up. You can see this is a clear trend line going up. If you look at goods, it started to pop back up after a few months of going down. If you look at food, it's relatively stagnant, still high, but stagnant, and now it's going up again. So it just depends on how this is going to balance and shake out, people. I think we're going to see prolonged inflation with big periods of disinflation, which we're going to see in this chart right here. So if we look at food, energy, and commodity prices falling, yes, they are falling pretty steeply, pretty sharply. You can see that in every one of these charts. We have food and agriculture, we have crude oil, we have commodities. These are all coming down. However, they're coming down from all-time highs. Take a look at 2016 through 2020. Take a look at 2016 through 2020. Take a look at 2016 through 2020. We are still much higher, multiples higher than where we were at those points. So with the components of CPI falling, CPI inflation has peaked for this economic cycle, which is a good thing. It's a good sign, especially for lower middle income people. So the slide number 5, what is going on? We are not seeing disinflation, or disinflation does not equal deflation, okay? So disinflation means slowing inflation. Prices don't decrease, they just increase at a slower rate. We just saw that with this latest CPI print in September. So central banks will actively fight deflation and target 2% yearly price inflation, which is total BS, modern monetary theory, pseudoscience. So I didn't write that. That was Joe. I should have edited that out. But if you guys aren't familiar with MMT, go take a look at The Deficit Myth, the book called The Deficit Myth by Miss Kelton. And just let me know where you stand on MMT. I don't know. She's a lot smarter than I am, I think. I hope. But this is funny that Joe left that in there. So what now? So inflation is slowed for now, okay? We're moving into stagflation. This is elevated inflation with slow to no growth. Ray Dalio just talked about this. Jeff Gunlock just talked about this. Everyone is talking about stagflation. Let me know what you think in the comments below. Are we in stagflation, or will we see stagflation in the United States? So if we are in agreement that we are going to see stagflation, what assets will perform well during stagflation, and what can you allocate to now to prepare yourself for the next inflationary impulse? Well, here's an excellent slide from Schroders, put together by Joe. You can see here that on the y-axis, they have different periods that they define, which I will read to you. It's in this small font, which you probably can or cannot see depending on your viewing device. We have Goldilocks, disinflation, reflation, stagflation, and then we have asset classes in the blue. We have U.S. equities, aka stocks, U.S. treasuries, U.S. T-bills, commodities, gold, and REITs. This is the average real adjusted inflation year-over-year total return since 1973. Okay, so I know you're going to call me crazy for talking about gold, but if we genuinely are in a stagflationary environment or a stagflation environment, gold is the clear winner during stagflation. You can see right here, commodities and reflation, 21%, gold 22.1 in stagflation, while everything else gets crushed. Okay, so let me define this very quickly. So just so you know what Schroders means by these names. Goldilocks is accelerating growth, falling inflation. Disinflation is decelerating growth and inflation. Reflation is accelerating growth and inflation. Stagflation is decelerating growth and inflation above the 10-year average. So gold is the clear winner during stagflation. Diversify to protect your wealth, commodities and REITs. They also appreciate well. And then also you can hold commodity indices such as DBC, USO, and wheat. You don't need to own a storage facility, and you shouldn't be trading these futures if you don't want to take order or take delivery of these commodities. So how can you position yourself? As always, we try to provide information on how you can position yourself. This is not a fear-mongering channel. I'm not selling you precious metals over a 1-800 number. I got something much better than that. Stay till the end. So how can you position yourself? You could allocate to gold and commodities, prepping for stagflation potentially for the next 9 to 18 months as the Fed keeps policy restrictive for an extended period. You can allocate to these assets and outperform if that is the scenario that happens. Number 2 is once we hit around 4% CPI, the optimal time is to scale back into equities, into stocks, though in my opinion, you should never sell, especially if you're trying to build a long-term portfolio. Equities have fallen precipitously and are approaching the bottom price range for this cycle. In periods of reflation, which we just talked about, equities tend to outperform most asset classes. Build that emergency cash pile. Build the war chest, you peasants. Lots of uncertainty. Moving into a shaky macro situation where countries are very fragile, an interconnected world could send the real economy crashing at any moment. Use the times when things are relatively tame, like right now, to prepare for when things turn south. Okay, with all that being said, let's get into my thoughts. Okay, so I'm leaving for vacation literally tomorrow. My thoughts are, I don't care. I'm going to be sunning my buns on the Adriatic, dude. Couldn't care less about any of this. No, I'm just kidding. So what do I mean by that? I'm just saying that to be funny, but in all seriousness, if you have a solid plan and a solid portfolio, none of this stuff matters unless we see legitimate, stagflation, legitimate periods of high inflation. If you take a look at Japan, their market hasn't hit all-time highs for 30 years. It just did, I think, in 2021. Last time before that was 1991. 30 years of just whatever, okay? Imagine if the S&P 500 did that, or, VT Sachs or VTI or total domestic stock market. People would be jumping off buildings, okay? They wouldn't know what to do. So with all this being said, don't take every headline and adjust your investment portfolio. Take these headlines, take the information that I'm giving you, and be aware of it and understand it. But the biggest takeaway for me during this whole year, since January, since year to date, my portfolio is down, I think, like 12 or 13% year to date. I think VT Sachs is down like 16% year to date at the time of this recording. I don't care. I haven't sold anything. I never have. I never will. I don't want to say never, but I haven't sold any of my core positions. I've been investing since I was 18 years old. Okay, I'm 34 now, about to be 35. My point is take the information and be smart with it. You don't have to adjust your entire portfolio every single time a headline comes out, but you should allocate a little bit to these ideas. That's how you can really come out ahead. So these are just ideas, you guys. If you're taking financial advice from a YouTuber, people that were never in finance, that don't have a financial background, that don't have a finance degree, take it with an entire massive grain of salt. Maybe the whole salt mine, in my opinion. But if you do appreciate content like this, I will say please subscribe, please hit the bell notification, and hit the like button. All we're doing is providing facts and information. It's up to you to make a logical adult decision using that information. As always, if you like the video, give it a thumbs up. Check out Whiteboard Finance University. I have dedicated professors for options, stocks, real estate, macro, all that good stuff, plus live streams with me. Private school, private live streams. I reveal everything that I own, all my accounts, all that stuff. I'm an open book, you guys. Check that out. Check out the waiting list down below. As always, I hope you got value out of this video and have a prosperous day. I will be drinking Turkish coffee at the beach and the Adriatic. No suntan lotion, no seed oils. Let's see, what else? No McDonald's, which is good. All right, I'm done. Time to end this. Have a prosperous day. Thank you and have a prosperous day. I don't know how I'm going to edit that. What if I just left it? Oh my God, I am so tired, dude. I did 4 videos in 4 days. I don't know how these other dudes do it. They're doing like 3 videos on 3 channels and this and that. I'm like, dude, life's way too short, but I don't know. Do what you got to do. All right, guys, peace.